So Wednesday morning, welcome back to Squawk Box Station Side. Let's get to our special guest this morning, Jim Rogers, chairman at Roger Holdings. He joins us live here at our Asia headquarters. And we've also got Michael Yoshikami staying with us, our guest host, president and chief investment strategist at YCN Med Advisors, live out of San Francisco. Both of you, good morning. Great to see you, and welcome back to the show. Jim, we've had this huge rally in equities from early March lows, and a lot of asset classes are pricing in recovery. People are starting to look at the glass as more half full now. Are you any more optimistic?
Well, I'm not buying shares, if that's what you mean. No,
okay.
Not at all. But when you have a huge collapse, I mean, everybody stops buying anything, then you've got to restore the larder, if nothing else. You run out of sugar, you run out of wheat, you've got to buy something else. So that's what's happening. I would suspect we've certainly seen a bottom. Is it the bottom? I doubt it.
You doubt
the bottom will probably come later this year, next year, who knows when.
Okay, no timing there. Just real quickly.
Why?
Go ahead, Mans.
Oh, yeah, I was going to ask, why are you so skeptical? Why do you think there might be another bottom later on this year?
Well, essentially, Mandy, they haven't sorted out the problems at all. All they've done is flooded the world with money. I mean, Mandy, you give me $5 or $6 trillion, I'll show you a very good time. There's no question about that. That's what they're doing. All this money is getting pushed out into the world, but it's not solving the basic imbalances. America's a gigantic debtor. Mandy, the idea that you can solve a problem of too much consumption and too much debt with more debt and more consumption, I mean, defies belief. But that's what these people think that is going to solve the problem.
Okay, in terms of buying equities, you did buy back in November, correct? What would it
I
take
bought
for
Chinese shares. Yes, I bought
shares.
Chinese shares
Okay,
in October, November.
We've had that market roar up. What would it take for you to go back in again? What would you need to see happen in
the way I'm playing this world is I bought the Chinese shares. I haven't bought any since. But I've been buying commodities because the only place where I know the fundamentals are getting better are commodities. I mean, farmers cannot get loans for fertilizer now. I mean, nobody is going to open a mine for years to come.
Supply side crunch,
They cannot, and so supply of everything is going down. And you have governments printing money like never in history. That has always led to higher prices. So if the world economy gets better, commodities are going to lead it out. And if it doesn't get better, commodities are still the place to be because they're printing all this money.
Okay, fair enough. Michael, jump in on this.
Yeah, Jim, you know, you obviously have been a great proponent of commodities, and you've been right. Commodities hit a huge peak a year or so ago, and then obviously had an unprecedented collapse. I know that I think you were quoted as even being surprised at how much it had collapsed. And I know in a recent Barron's article, you had mentioned that you actually were able to withstand some of that downturn because you were shorting some financial stocks, such as Citigroup and Fannie Mae. And I guess I'm wondering right now, are there any hedging strategies that you're using right now? I realize commodities have fallen quite a bit, but there certainly is an insurance policy that you had in place when commodities collapsed with the financials. Thank goodness, I think, as you said in the article. You have any thoughts on that?
Yeah, what's a good pair trade now?
That certainly worked last year, even though commodities did go down because of forced liquidation. I mean, everything went down, as you well know, Michael. But fortunately, Citibank went down more, and Fannie Mae went down more, etc. At the moment, I have virtually no hedges. I suspect there's going to be the next problem, big crisis, will be in the currency markets. I'm trying to figure out what to do there. I bought more yen. Because I would expect the yen to withstand whatever comes next. But at the moment, I don't have any shorts. I think that's an accurate statement. Any shorts at all.
Not shorting dollar?
Well, to the extent I'm buying the yen, yes. But I'm certainly not shorting the dollar, not at the moment. Although it may be the peak. We may have come to the peak. I certainly want to get out of my dollars. But, Michael, to your question, I have virtually no shorts right now. I'm trying to figure out what to do. I do have commodity longs. I do have my Chinese longs. But beyond that, I'm watching for the most part.
Michael, you got any ideas?
No real ideas in terms of what to be shorting, but I think it's very interesting because, you know, oftentimes, I know, Jim, you do lots of media appearances, and the time is so short, you have to pretty much compress all of your views in a very, very short segment. And so I think it's important for investors to recognize that it's not just a commodities theme. There are other ways in which you can invest successfully, which you outline in your many books and articles. Isn't that true?
Oh, yes. No. Michael, I've always invested all around the world in stocks, bonds, currencies, commodities. Sometimes, you know, if I get something right, people think that's what I do, like commodities. But no, I've always invested in everything, both long and short, and still do.
Jim, you just made it very clear that you're sceptical of this rally that we've seen in equities. Shouldn't we be sceptical of the rally that we've seen so far in commodities, since a lot of it has come from China, strategic buying, whereas the rest of the world really is still in this prolonged slump?
Or is China demanding it?
Aren't we really going to see a conviction in the commodities market when the rest of the world recovers?
Well, first of all, the fundamentals for General Motors are not getting better. The fundamentals for Citibank are not getting better. I can think of very few industries in the world where the fundamentals are getting better. But the fundamentals for commodities are getting better, full stop. And even if demand goes down, supply is going down too. So is it an artificial rally in commodities? Well, if it is, it's an even bigger artificial rally in stocks, is the point I'm trying to make. And you say the demand is coming from China. I mean, who cares where the demand is coming from? If somebody buys copper, they buy copper. It doesn't matter if the Afghanistanis or you or the Germans, it's demand.
Okay. So, Jim, if I could just oversimplify and sort of summarize the message that you're trying to get across here is you really like commodities, they're going to go up in future, but you should be bailing on equities and you should be bailing on the dollar as well. The problem is that recently the pattern has been that when equities have gone down, the dollar has tended to gone up. So are you suggesting that at some stage there's going to be a reconnection and the equity market and the dollar are both going to go down at the same time?
It could very well happen. Any connections like that, Mandy, for the most part, are temporary as far as I'm concerned. I didn't even know they were happening. In fact, they're so temporary. But you can have certainly a dollar crisis, and if you do have a dollar crisis or a sterling crisis or whatever the currency that starts it will be, or an Icelandic krona crisis again, then you will certainly have it'll have an effect in the stock market. There's very little question about that.
Okay, we're going to get a lot more from Jim Rogers in just a bit. We've got to go for a quick break. Still time to get your questions in, though. Email us at squawk@cnbcasia.com.